Well, the fashion house Michael Kors had a banner first day of trading after its IPO yesterday. The stock soaring more than 20% yesterday, although settling below that the high for that session. Now, joining me to talk more about what is next for Kors and the fashion industry is Bloomberg contributing editor Jay Margolis, a fashionable person himself. He's a former head of such well-known brands as Reebok, Esprit, Tommy Hilfiger, and also Liz Claiborne. So, Jay, what did you make of the debut?
Well, it's so interesting to me because in 1992, I worked with Silas and Lawrence and Joel Horowitz on the public offering of Tommy Hilfiger and then some secondaries after that. And they're following a formula that has worked incredibly well that a lot of financial people did very well with. I think also that they have done their job. John Idol is a CEO. They really did realize that their own stores is what made them successful. Accessories has been a key part of the driver for Michael Kors. Michael Kors' visibility on TV in terms of reality show really did promote it, but they've run the business very well. They've invested their money now over a couple of years, so it hasn't been a short period of time, and the investment now has paid off. I think for the industry, control of the product, how they came to market, how they marketed the product was really, really well done, and they deserve the multiple they're getting.
Yeah.
The fear for me would be that it's a fashion business. It's a little different than Coach, or who they are kind of patenting that. They're saying that's a little bit of the rollout of stores as Coach did internationally in licensing, and I think that that's what's being said in the market. Coach is a little bit more of a commodity, and Reed and Lou, Frankfurt did a great job of rolling that out gradually. The challenge to plan 100% increases, they think they can get a 60% increase in their top line and 100% increase on their bottom line. China is not even...
You say in fashion it's harder to get to meet those targets?
You need commodities that you can fill in on, things that you're a little bit more sure of, things that are a little longer term. Kors is a fashion business. There's base parts built in. The question is, how can they continue to grow at that rate? And you and I have discussed, even in the deal, China is not part of the deal, which was interesting to me because it should be one of the things that would be fueling their growth long term. 200 new malls opening up in China, amazing malls. They'll have Kors shops, they'll be growing there. They held that separate as a separate company. They did the same thing at Tommy Hilfiger. So eventually they will grow that company, then sell it back to themselves. So they're very shrewd.
And that could be another driver for the stock price then, if
that would be a driver for the stock price, yes. Or again, they're going to pay for it from their other companies. So I think it's just an interesting way that they think about, going public and what they're going to do. But I think it was a perfect offering. I'm just citing some caution that it is the fashion business. Be careful, it just doesn't continue to grow for all brands after that.
Well, but you actually thought that Kors might be taken over instead of a listing. I mean, do you think in the end this was the right move for Kors then?
The right move for John Idol and Kors, and look, the multiple they got was great. PVH was the likely target. Everybody in the industry knew that that would make a lot of sense. They've grown their Tommy business internationally so well. Kors laid onto that, gives them almost an LVMH kind of power base with two really strong brands. That didn't happen.
Right. No, it did, and here they go. And then we'll see. I mean, I think the China angle is very interesting when it comes to Kors, but also all these other luxury brands. Jay, great to see you, as always. Jay Margolis, our Bloomberg contributing editor.